FX Coins, this is Chris Lewis taking a look at the U.S. indices. The NASDAQ 100 has fallen a bit during pre-market trading on Tuesday as we are starting to pull back and perhaps look to fill the gap from last week. Regardless, it does seem like we are looking at this through the prism of trying to find value. The 25,000 level should continue to offer plenty of support, right along with the 50-day EMA and the uptrend line. While it is somewhat of an ugly pre-market move, the reality is we are still very much in an uptrend, and that doesn't change with a red candle. The Dow Jones 30 looks as if it has fallen below the 47,000 level, only to find value hunters as we are turning around in pre-market trading already. A move back up into the consolidation area makes a lot of sense to me, and a move to the 48,000 level is very possible. The 50-day EMA underneath offers support as well, but this index looks like it might be the one that leads the other two going forward. We'll just have to wait and see. That market memory, though, very strong. Obviously, a lot of traders are looking for cheap stocks to get involved in. The S&P 500 has filled the gap from last week and now sits right around the 6,800 level. The 6,800 level is an area that's been important multiple times, so it'll be interesting to see if it holds. I do think it's got a fair shot at doing so, and a turnaround and a bounce obviously would have traders very bullish. If we continue to fall from here, the 50-day EMA and the uptrend line both offer support, and I have no interest whatsoever in trying to short the market, at least not until we get well below there. Keep in mind the S&P 500 is driven by the same tech stocks sector theme that the NASDAQ 100 is, so it's essentially looking very much like the same index these days. Keep in mind that there are a lot of questions out there about the Federal Reserve and its interest rate decision, as well as whether or not they will continue to cut going forward. After all, Jerome Powell said during the press conference in this last FOMC meeting that a rate cut in December wasn't necessarily a done deal. That is a little bit shocking to markets, but really, when you look at it, the whole thing has been pretty orderly. So I think the uptrend continues. I do believe that dips get looked at as buying opportunities in this nice 45-degree angle slope of an uptrend. That's exactly what you want to see. Just a nice, relentless, steady drive higher.